Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Thursday, August the 6th. The year's 2020. Let's talk trading. The hardest part about trading, part 3. Once again, the hardest part about trading is you. You go stand in front of the mirror. That's the hardest part about trading. What I want to talk about today is your attitude. But before I do, I just want to remind you these videos are for educational purposes only. Your results may differ from mine. Trading is extremely risky. You can lose all of your money. If you need trading, investment, or financial advice, seek the advice of an accredited financial professional. And while I have your attention, if you're new here, click subscribe, click like, click the bell so you can be alerted when I put out a new video, and then click share and share the video all over the internet. Somebody says I need to do that in the beginning. I usually do it at the end, but I guess not everybody watches the videos to the end. Okay, trading, your attitude. There's a lot of people out there who make videos and write books and do seminars and podcasts and blogs, etc. And they want you to believe in things like the market makers are running your stops. The brokers, they're cheating you. And the reality is the market doesn't give a rat's what about you. The market's just going to do what it does. What is the market? You've got brokers and you've got traders, right? Most of these people don't even know you exist. So the fact that you put on a stop and then the market comes down and knocks your stop, hits your stop, and then you think they cared about you, or oh, they could see your stop. So, if you're trading at a dime a pip or a dollar a pip, if you really think that, they're going to move the market just to get your stop, it's like, let's get real. Okay. You got to quit taking this stuff personally. And that's what happens because you take it personally, and then, you know what happens then? You put your brain in the wrong spot. You're going to start feeling pain because you think they're doing it to you. No, they're just doing it. It's not to you, it's what you make of it. I was talking with Walmart earlier, and he said he was talking to another trader, and that this guy was, I forget what word but basically Walmart was upset. And she said this guy upset him. But it's like, I told Walmart, no, you're the one, you're making yourself upset. Doesn't matter what he says, what the other guy says, you know, it's your reaction to it. So, that's where that pain comes from. I said, we're adults, and people, I deal with the union and people talking about feelings and microaggressions and safe spaces and all that other nonsense. At least that's the way I feel about it. It's nonsense. It's like, it's all your reaction. If somebody calls you a name, you don't have to react to it. You can just shrug it off. Consider the source. And it really relates to trading because, I put videos out, and every now and then, there's that one person that wants to take a swipe at me. But, I laugh. I said, I've been doing this stuff since what? Oh, 2001, online trading. I'm still around. I mean, how many of those people that took swipes at me, are they still around? I mean, they, Stock Fetcher, they took swipes at me. Trade Station, E-Signal, all of them. Forex Factory. And some of them are still out there doing it, but I'm still here. I'm still standing because I don't let them get to me. And that's the thing about trading in the market. You can't let it get to you. You've got to control your mind, your reaction. And another thing Walmart says is funny. Um, I had told him that a trader suggested that I do I guess a how-to series, and really, getting started in trading for a living. So I said, Walmart, maybe we can do something like that. He goes, yeah, maybe in a couple of weeks we're going to think about it. We might put something together. But, the one thing is, this trading is personal. It really is, because Walmart says he goes that he couldn't trade my plan. I can trade his plan, but he said he couldn't trade my plan. And I guess there's a difference. And part of that difference is for me, my background's computers. Studied logic, studied statistics. So I'm basically like, that trained monkey or robot. You put a plan in front of me and then I'll execute it. In fact, I've been toying with the idea, only toying with the idea now of going out there and find some squiggly line system and then introducing it here and then actually trading it for a week. Because the thing is, as I keep saying, the reason you get in the market has no bearing on the outcome. Doesn't matter if you're trading, psychological lines, the sweet spot lines, the wick zone, the rat zone, the buy zone, trading off of dynamic support resistance. None of that matters when you get in a trade. All that matters is whether or not after you get in the trade, the market gives you an opportunity to take profit and whether or not you take it, you know. And what is that? That's that money management part, And what's your attitude? If you're up 5 pips and you're sitting there, you're watching it, and all of a sudden you don't take it and the market moves back, do you get mad? Do you get mad at the market? Do you get mad at yourself? I mean, this is all attitude. I mean, or do you just say, okay, well, the best thing for me to do according to my plan is just to sit there and watch it. And either it hits my stop loss at break even +1, or it'll turn back and go the other way, and maybe I make 10 pips or more. But once again, it's that your reaction to the market is what's going to happen, So if it comes back and it hits your stop and you have a loss, that's part of your trading plan. Your trading plan has to accommodate the fact that you're going to lose. But the thing is, you've got your risk set up so you don't lose any more on a particular trade than you're willing to lose. And that's the biggest thing. That what you're willing to lose per trade. So if you've got $1,000 account and you divide it by 20, you got 50 trades, or I'm sorry, you have 20 trades at $50 a trade. Okay, you can lose $50. You'd have to lose 20 times in a row to blow your account. Isn't that a lot better than losing one time in a row and blowing your account, or losing 2 times in a row and blowing your account? That's why you have to have that risk in place. Now, let's take a look at the market. What's going on here? Okay, we have broken above the previous. I don't know why the computer just froze there, but we're 8 pips above previous week's high, and 8 pips off, 7 pips off of the high for the week right there. And look what's happening. We're only 68 pips below the open of the year, the yearly open. We're in that range of the opening, that first day of the year, that range. As I mentioned, 68 pips below the low. Really moving up this month. Notice opening above the midpoint. Inside bar, not to be had again today. And there's still a few other pairs out there with some inside bars. And the euro yen for one. I haven't traded that in forever. Maybe I need to go back and trade that. Oh, a light day today. Only 4 pairs over 100 in range. The pound clocking in at 75. We're 16 pips now above the previous day's high. See breaking out right there. Another pivot point missed. So we never got a trigger on that zone, on the buy zone, to take the short, fading the pivot. Okay, red rats, get ready again. We've got enough range. Range is large enough. You know, there was something, I think I might have mentioned it in a video, that there was an idea I had to add something to the rat zone, but I can't remember what it was. So if any of you guys remember, drop me a message. Let me know what it was. But I remember there was something I wanted to do to the rat zone indicator to improve it. There was some other message I wanted to put out, but now I can't remember what it was. Once again, we missed that daily pivot, but we did take out the weekly and the daily. So we've got 1, 2, 3, 4 from last month and 2 from this month. I'm thinking there's going to be a reckoning sooner or later. And the wick zone, as you can see right here, in and out of the wick zone along the top, there's 1, 2, 3, 4. So just going long here right around 61, you could have picked up, 10 pips or more, what, 4 times? And technically, if you wanted to play this dip here, you could have gotten it again. But that would have been going against the H1 candle color, which you better be prepared if you do that. Looking at the M1, you can see there's a lot of lows that haven't been taken out, but we've taken out all the highs except for this one. So, this is once again TROHL5, and it's just that it only shows the lines that haven't been crisscrossed. And so you see here that line, because it opened right at that high, went up, and then it came down, so it crisscrossed it, so it took it out. And note that this was an inside bar, or is an inside bar, but this is only on M1. And the simple price action, H1 candle color at the line, it's almost like beating a dead horse, but I mean, this is more like milking a cow that gives milk every day. Some of these trades can make, see, that's 10, 20, 30, 40, there's 50 pips off of that hour. Turn right back around, 10, almost 20, turn right back around, 10, 20, 30, turn around right here. There's an opportunity to make at least 5, it looks like. Right here, there was a couple. Right here, there was another 10. Let's see. This one, that was a 10. And right here, 10, looked like going to 20. What more do you need, really, when it's trading? And, the difference is, we talked about trading for a living or trading as a hobby, or, if you're investing, each one of those is different. And Walmall and I talked about that today too. The thing is, it just gets down to, do you have a plan? Do you execute the plan? Or do you let what the market does, influence your attitude, which is going to influence your behavior? Because if you get your mind on tilt, you're not going to make good decisions. It's all your attitude. And if you have the attitude that you take things personal and the market's against you, you're doomed. Because you just have to remember, it's not what you trade, it's how you trade it. So get out there and drain the banks. And thanks for watching the video. And this is the Rumpled One signing out.